The internet from 1990 to 2000 grew at 63% a year. That was the fastest adoption of any technology in all recorded history. Prior to that, mobile phones was the other one. But what happens is the internet technology and the mobile phone technology allows for these networks to be built. And once that network's in place, it's faster to build the next network. So in India, for example, they've just basically given out free data to every mobile phone in India. So guess what? Data usage is the highest in the world. And so their internet scaling becomes faster. So the internet was huge, as we all know, and it remains huge. So at 63% a year, it then flattened out over time as more and more people got adopted. So at 1997, it was growing at 63% a year, and there was 140 million users of the internet. In 2021, there are 140 million crypto users, and it's growing at 113% a year.
Jesus.
Double the speed. Now, this is where humans struggle. Linear numbers and exponential numbers. Because it's exponential, it means that growing at 113% a year, we're going to go from 140 million people to 1 billion people by 2024.
Jesus Christ.
I mean,
crazy.
so when you go back and how you introduced all of this. So if you know that something is being adopted at this speed and it's a network of money at its core, and you can buy an infinitesimal fraction of it, so everybody can buy 10% of their net worth, then everybody who takes this opportunity will probably have the biggest opportunity in history to make money. I did a piece that was probably the most viewed piece I've ever done on YouTube. It was like, I don't know, 2 or 3 million views, called The Retirement Crisis. And it resonated because I kind of showed how people haven't seen it, check it out on YouTube. It's well worth your time. And it's a long time ago. It predicts a lot of what's going on now. And the point being is that there's a bunch of retirees, the baby boomers, and they've kind of screwed it all up because they've got all the debt. They've got too much equity exposure. It's really hard for them to retire. This is why the Federal Reserve don't like equities going down, because you've got this richest group on earth who are kind of stuck. They never got enough money to retire on. But I want to look through the eyes of the millennials. So they are 32 years old. At the same age, their parents at 32, the baby boomers, had all-time cheap valuations of equities, all-time cheap bonds, all-time cheap credit, all-time cheap property, right? So they couldn't help but make money. They kind of screwed it up because they actually ended up going into debt as well. But they couldn't help but make money. So then the millennials had the opposite: all-time record valuations of equities, all-time record valuations for bonds, all-time record credit, all-time record highs in property. So I'm like, these guys are screwed unless something else comes along. And that thing is crypto. Because the future expected return of crypto, it's been growing at 213% a year in returns. That's how much it makes, even though it's very volatile. Sometimes it's down to 70%. Over time, you're making 213% a year. It has grown as an asset. It's gone up. I think it's 2 million% since inception. No other asset in all recorded history has ever done this. And we haven't even started. I still think there's probably another 100x from here. Not even the baby boomers got given that. The S&P didn't go up 100x since 1980. So this is the magnitude of what's there. So I'm screaming from the rooftop saying, you might be cynical. You might think you don't understand it. You might think you can't afford to play in this, but you have to listen, because this is the opportunity. You can't come back to me in 10 years' time and say, well, we missed all of that. All the rich people got richer. No, you, I, everybody else is saying, now is your time. Don't be irresponsible, dollar cost average, do all the right things, but here is your opportunity. This is the biggest opportunity I've ever seen, and I'm going to take advantage of it, and so should everybody else. This is not rich or poor. This is an every person opportunity, and we've never had this before. What gets worse about this is this affliction, this crypto affliction we all get, right? The rabbit hole, as it's known. You start with understanding money, which most of us don't think about. Then you kind of understand how we're getting screwed by central bank printing and the debt-laden economy and what it means. And then you start saying, oh, okay, but that's Bitcoin. And then what's this Ethereum business? And then you start realizing decentralized finance, and you're like, it's kind of a finance thing, but that's kind of cool because I can get yields now. You know, I can get, instead of getting zero on my bank account for my hard savings, I can now get 6% a year. Wow, that's a difference. It's like going back 25 years in time. And then suddenly NFTs come and community tokens, and suddenly your mind is completely blown that this is not just money, it's the entire exchange, transfer, and storage of value for the internet. Whole business models are about to change massively because of what this technology unlocks. And then once you get your head around that, you're like, oh God, I can't even hold this in my mind any longer. It's so big. And that it's not just buy some Bitcoin, I'm going to make some money over time. You know, it's actually an entirely parallel financial system and business structure for the world. And it's being adopted faster than anything we can ever imagine. Well, there's a history of money, whether it's backed by gold or not, where government gets themselves excessively into debt and they devalue the money. So the Romans used to clip the edge off the coins so there was less gold in each coin. And eventually people would lose faith in the coins because they blend them with silver and then blend them with copper. And, you know, the coins were worthless because that was supposed to be worth the value of the denarii in Roman times. But governments can't help themselves. Humans, we're just humans, right? Humans are fundamentally flawed creatures and we always will be. So then we have the gold standards. You know, the US and the UK were on gold standards. World War One, World War Two, we all have to leave it because we've got too much in debt again. We've overly financialized yet again because humans love leverage above all things. It's kind of sex and leverage are the two things that drive humans for some reason. Then we adopt a new system, which has been around before, but it keeps getting abandoned, called fiat money. Fiat money is money not backed by anything. It's backed by the promise of the central bank paying it. So that's the dollar bill that we all are familiar with. And every country in the world now adopted fiat currency. But as with everything, if you're really thirsty and I gave you a bottle of water or sold it to you, you'd probably pay me 10 times too much for that bottle of water. If I give you 1,000,000 bottles of water, they're worth precisely zero to you. So scarcity has value. That's art, that's cars, that's almost anything. Humans value scarcity for whatever reason we do. And so if you're printing too much money, you're creating less scarcity. So yes, there's money everywhere, but the money has less value. So once you understand that, you say, well, what does it mean? The dollar hasn't collapsed. It's kind of where it was versus the euro in the last 5 years or whatever it is. And then you say, but my $50,000 salary now can buy me much less shares in Apple, Amazon, Google, Microsoft. In fact, units of the S&P 500, I suddenly can't buy as much. Since 2008, it's a fraction. I can buy like a third of what I could. Same with real estate, same with gold. And then you're like, assets have suddenly got expensive. They haven't. The value of your savings has gone down, or your money. So you can't afford to buy assets. What is an asset? An asset is deferred consumption from the future. I buy a house, I sell it in the future, I get to retire, whatever the things are, right? We don't buy the S&P because we want to hang it up in our wall. We buy it because we want to sell it at a future date to realize money. So that means our future selves are now poorer. That's essentially what this means. That's what currency debasement is. So Bitcoin comes along in 2008, in the middle of the crisis. It's kind of like it was perfectly prepared for this and said, Satoshi goes, hey, look at this. I can create an algorithm that only creates so much of this thing, the Bitcoin, and it can never vary, ever. So therefore, this is scarcity that humans can't fuck around with. Now, humans have this propensity to fuck around with scarcity because they're economically incentivized to do so. Here they can't. So then they become economically incentivized to own this asset because it's scarce and it cannot be changed because it has this consistent supply curve and a limited number. So Bitcoin becomes this great store of value. And it would look like gold because gold's a good store of value. It's worked for thousands of years. But Bitcoin has this other thing to it. It's a network, which gold isn't, and it's technology, which gold isn't. So we have use cases and the benefits of building a network. So suddenly it goes up exponentially in price. Roll on to 2015, and suddenly somebody's looking at the blockchain and they start saying, imagine if these bits on the blockchain, which is where you record the ownership of something, in Bitcoin, it's Bitcoin itself. What happens if we could put a contract in there? Because humans live off contracts. Everything is basically a contract in our legal terms. And that was the rise of Ethereum. It became a platform where you could programmably change the blockchain, not the attributes of the blockchain. You couldn't remove anything off that ledger, but you could change the little holding buckets and say, well, it can look like this, it can look like that, it can adopt to this. And those things were verifiable as well. So they couldn't change. So this created Ethereum, which became the platform. So if you think of Bitcoin as this store of value, this very pristine, beautiful thing, kind of like owning a part of the internet. It's, as you said, I mean, everybody has to use Ethereum basically that uses this crypto rails, unless you're just in the Bitcoin world. But everything that we've talked about, and everybody will have, even if you're not very familiar with the space, will have heard the term DeFi or NFTs or tokens. Basically, most of that is still being built on Ethereum. And as you said, the network. So what is this Metcalfe's law that you and I have referred to? Metcalfe's law is, it really started to become understood in the 80s, and then much more so as mobile phone networks started, these giant connected networks, right? Because digital technology allowed networks to connect. Before it's humans, we couldn't connect with each other in the same way. So networks connect with mobile phones, and suddenly they explode in value. All these phone companies, huge companies. And if you added them all up around the world, they'd be worth tens of trillions probably. We just don't even think of it in those terms because they're fragmented networks. Then the internet comes along, this free network, and everybody builds on top of it, and they create network effects. Like the most classic example is Facebook. Facebook connects us with friends and family, and in exchange, they get your data, they sell you adverts, and so you've got a bunch of people using it, a bunch of businesses now building on it, and this advertising monetization structure. Shareholders get rich. You and I get to unfortunately meet somebody from university that we don't want to talk to, that we met 20 years ago and we're now connected with again. It's that. But the network that Ethereum and Bitcoin does is different. You're the owner of the network and the user. So as a user, like you said, with the NFT, you're actually owning a share of the network itself. So everybody uses it, owns a part of it. Therefore, if the network's going to get used a lot, you're all going to get rich, and the value of the network is going to go up massively. And the more people build interconnections, so the Metcalfe's law is not only just the number of nodes, i.e. the number of users, but how much they connect with each other. Well, you're seeing it because there's NFTs and there's DeFi and there's all of these applications, or the store of money aspect. These things all together, and then there's the linking of all of these, like Chainlink or some of these other protocols, Polkadot. They're linking all this ecosystems together. So I can send you $1 instantaneously, and we have no idea whether it went on Bitcoin rails, XRP rails, Ethereum rails. And guess what? We don't care. I promised you $1. You want to get the dollar instantaneously. That's interoperability. That's all coming. So this is what Ethereum is about. It's the magnitude of this network where everybody's developing everything on top of it, and it's scarce supply. So it's seeing an even faster adoption rate than Bitcoin now, for the reasons that seem pretty clear, because it has more use cases than currently the Bitcoin blockchain does. Doesn't mean Bitcoin blockchain can't in due course, but right now there's a lot more use cases in Ethereum. It's super exciting.
Do you think that Bitcoin would need to do something like that in order to retain its value proposition?
No, I think its value proposition stands above all things. It is pristine, it's pure, it is what it is. And the way it's so impossible to change any of the attributes of Bitcoin makes it a bit clunky. And that clunkiness is its beauty. It is so secure. It's the most secure of all protocols. So let it be what it wants to be. Now, people are building things like the Lightning layer, which allows you to do lots of fast payments over the top. Maybe that scales. Maybe it doesn't. Doesn't really matter. That store of value for every person to think of, like it's owning a piece of Manhattan real estate at low prices, that's never going away. Not in the conceivable future, because humans have now said it has value and it's being adopted very fast. So no, Ethereum's a very different thing. It doesn't compete. That's how I like to think about it. And unfortunately, when you go online, people will tell you, well, it's competing and it's not as good. You have to ignore all of that and look at the whole space overall and say, and just be honest, saying, we don't know where this is going to be in 10 years' time. And like you say, so therefore I can own 3 of these things. And probability is I'm going to capture a large part of this, and maybe I'll adapt in due course. And so,
yeah, one thing, sorry, go ahead.
Yeah, so it's don't overforce the narrative. Just be broad, be open, and always be learning, as you rightly said, because we don't know. This is all new, and it's happening at lightning speed. The narrative of entrepreneurship is start thing in garage, borrow money off parents, or start it on your credit card. 3 years later, billionaire. Right? That's the narrative, and then you write your book on how I manage my company. Right? That's actually not true. The best book ever written on this is Ben Horowitz's The Hard Thing About Hard Things. What you have to do is battle both your assumption, as you say, and test it endlessly. You have to be paranoid, excessively paranoid, but still confident in that you're right. And you also have to accept the risk of failure, because the moment you accept the risk of failure, which is very high in startups, you'll start hedging against it. Once you stop worrying about failure as the narrative, you tend to attract it. It's a really difficult thing. People who fear failure above all things tend to fail more. People who don't look at failure and just look at the moonshot tend to fail too. It's the people who can see failure as a wolf behind them and the testing of their ideas, but still having the conviction and maybe changing paths because the wolf is catching up. They tend to fail less. But it's hard, makes you feel sick. You don't sleep at night. And that's the beginning of Ben Horowitz's book basically is 2 pages of what that feels like. It's called The Struggle. And that the struggle is probably the most profound 2 pages in all of entrepreneurship. And it's true. And it's hard. 100x, whatever the number is. And have got obscenely rich investing in something that you're not allowed to invest in because of the law, because you're not an accredited investor. And in fact, the system's so set up that you're never, ever going to be shown this opportunity. And then at the very end, when the asset's gone up so much, they then list it on the New York Stock Exchange or the NASDAQ and dump it on retail when the best gains have been had. Now, within that, there's always going to be an Amazon and a Microsoft and an Apple. But your chances of getting it at the higher price, so you're the 52,000 guy and not the averaging at 30,000, your probability of success is always lower than those guys. So the system is against you. In this, the institutions are being held back by regulation and can't do it. But we're not. And we know that they have a lot of money because it's actually our pensions. And so they're going to put our pensions in this in the end. Well, we might as well make money from them coming into the market later and driving up prices ridiculously, because that is what's going to happen. Once this ETF is listed, every RIA in America is going to be advising their clients to buy the Bitcoin ETF and the Ethereum ETF, and it'll drive another $500 billion of price appreciation. This is all coming, and it is the opportunity. And I've tried to set everybody up like you. I've had that sense of responsibility. Real Vision was about that, but it's also a subscription model. So I purposely give ridiculous amounts of information out on Twitter that's free. Subscription model is because I need to pay my staff and create a proper business that has value. But I give a much out on free. We give tons of stuff out on YouTube and tons of stuff out on the podcast. And then with crypto, I just thought, fuck it. We're going to give the whole thing away free. So kind of Real Vision Crypto is a free channel. We just said we're going to get sponsors from these big players because they're making tons of money, the exchanges and others. They can pay for everybody else to get access, so I can pay the staff for the crypto stuff, because it's that important to me. It's like, guys, I'm giving you everything you need. We do 5 interviews a week with everybody in the space.
And they're so good.
So there's no excuse not to educate yourself. It's all there. At first, you go in there and go, "Well, I don't know what this is all about." That's okay. You'll find the thing that interests you, and you'll find your way in, and then you'll go down the rabbit hole. But yeah, I passionately believe, that the future of everything is based around community. You have a community in what you do. I have a community around what I do. And part of community is the inherent, or the inherent agreement that you're all in this together. I'm not going to be extractive of you, and you're not going to be extractive of me. But together, we can all benefit from being part of this community. Crypto is a community in its own right, and we're all benefiting from being part of that. We're all part of that community. But I think that that's why both you and I are very passionate believers in bringing everybody along for the ride, because everybody around us has enabled us too to build this amazing network and all of these things. So everybody should share in it. This is something that you'll pick up from my interviews. I've been talking about a lot. All of this is going to get tokenized too. Culture is going to become an investment. The probability of there being a Tom coin within 5 years is something like 100%.